Good day and welcome to your daily crypto update for June 12th, 2025. Today we're seeing a measured pullback in the broader crypto markets. Bitcoin is currently trading around $107,700, retreating from an overnight high above $110,300 and down around 1.6% on the day. Ethereum follows suit, down nearly 1%, trading near $2,770, while altcoins like Solana and XRP are down between 2 to 4%. Despite this softening, the overall market remains firmly above recent support levels, and key indicators suggest continued accumulation by smart money investors. Macro context and inflation impact. The primary macro driver this week, fresh U.S. CPI data, came in cooler than expected. Headline inflation printed at 3.2%, slightly below forecast. This has temporarily calmed Fed hawkishness and boosted appetite for risk on assets, including crypto. We're seeing a direct correlation between the softer dollar and increased interest in digital assets. The DXY index has slipped below 98 for the first time in 3 years, a significant tailwind for both Bitcoin and Ethereum. Institutional and regulatory developments. We're entering what some are calling the institutional crypto epoch. Roshan Robert from OKX declared this a new chapter driven by actual utility and infrastructure maturity, not hype. At the same time, Ant International, the global arm of Jack Ma's empire, is expanding its stablecoin operations and pushing for approval in both Hong Kong and Singapore, targeting an Asia-focused digital payments expansion. Meanwhile, Cantor Fitzgerald's Brett Knobloch sees the Bitcoin cycle stretching well into 2026. Backed by growing alignment with U.S. political policy shifts. Ethereum activity and ETF inflows. Ethereum remains a pillar of smart contract infrastructure. Currently trading at $2,770, ETH has been largely range-bound, but inflows tell another story. On-chain data shows a spike in exchange outflows, indicating long-term holding. Meanwhile, Ethereum ETFs in the U.S. recorded 12 consecutive days of net inflows, totaling over $420 million. ETH BTC ratio slipped slightly to 0.02568, but derivatives markets show renewed leverage building in Ethereum longs. Today's key catalysts. Here are today's 3 big drivers behind crypto price action. 1. Cooling inflation data gives investors confidence the Fed may hold or cut later this year. 2. The dollar's decline makes alternative stores of value like BTC more attractive. 3. In DeFi, Maple Finance announced a new lending pool collateralized with stETH, further integrating liquid staking into institutional workflows. On top of that, reports suggest that ARK Invest is preparing a research-backed case for a Solana ETF, which could be filed within weeks. Risk zones and downside watch points. Despite the bullish macro backdrop, caution is warranted. If Bitcoin loses the $106,000 to $107,000 zone, we may see a drop toward psychological support at $100,000. Options market data shows elevated put interest near that level. Additionally, the Financial Stability Board, FSB, issued a global warning about stablecoin risk contagion, especially as tokenized U.S. Treasuries proliferate across DeFi platforms. Altcoin moves in whale activity. Solana fell roughly 4% on the day, now hovering just below $160. Meanwhile, memecoin activity remains hot. 1,000 PPE and Trump tokens surged 15 to 22% intraday. More importantly, XRP whales moved over $150 million off Binance into cold storage, possibly foreshadowing a long-term accumulation play, and a spike in DEX activity on base and blast chains hints at broader adoption of Layer 2 ecosystems. Closing outlook and market sentiment. To wrap up today's crypto pulse, prices are pulling back slightly, but macro conditions remain favorable. Institutional inflows into ETH and BTC continue to rise. Whales are accumulating, and derivatives show positioning for upside. Regulatory risks remain, especially around stablecoins and U.S. elections. Stay sharp, stay skeptical, and stay ahead. We'll be back tomorrow with another full-spectrum market wrap. This is Crypto Alpha Edge, delivering clarity in crypto. Before we wrap up, a quick reminder. If you see any comments promoting random coins or promising huge returns, ignore them. We never endorse projects in the comments. Stay smart, stay safe, and always do your own research. This has been your daily institutional-grade crypto briefing from Crypto Alpha Edge. Stay sharp, stay early, stay informed.